Let's get one thing straight. Most trading indicators are useless. They clutter your charts with lagging lines and confusing signals that just confirm what you already see. But what if an indicator could do the heavy lifting for you? What if it could automatically draw key smart money concepts, the real stuff, right onto your chart? Well, that's the big promise. And today, we're putting that promise to the test. Many of you asked me to review a popular smart money concepts indicator. So we're going to break it down, feature by feature, to answer one simple question. Is this a game changer, or just another expensive gimmick? Let's find out. All right, the tool we're putting under the microscope today is the Price Action Toolkit by Flux Charts. I've got a clean chart ready to go, and I've turned everything off so we can build this up one concept at a time. First up, the foundation of many SMC strategies, fair value gaps, or FVGs. An FVG is simply a price imbalance, a gap left behind by a strong, impulsive move. The theory is that price will often come back to fill this gap. And boom. Just like that, the indicator spots and marks the latest FVGs. I have to say, it does a pretty clean job without making the chart look like a mess. Watch this. When I change time frames, it instantly adjusts. But here's a cool feature. You can actually overlay fair value gaps from a higher time frame, but we can still see these critical zones from the 15-minute chart. That's a powerful perspective. It even lets you filter by sensitivity to only show the most significant gaps. For identifying FVGs, this gets a solid pass. But what happens when an FVG fails? That brings us to our next feature, Inversion fair value gaps. Think of it like this. An FVG is supposed to act as support or resistance. When price blows right through it and closes on the other side, that level inverts. What was once support now becomes resistance. As you can see, the indicator marks these inverted zones automatically. These are key areas to watch for potential reversals or trend continuations. So far, so good. Now for the one everyone loves, order blocks. Okay, now we have several order blocks popping up. The indicator seems to be marking the last down candle before a big move up, and the last up candle before a big move down. These are our potential points of interest, or POIs, where we expect price to react. However, here's my first critique. Based on my manual charting, it seems to filter out some order blocks I would have drawn myself. The indicator claims to use a specific method confirmed by market structure and volume, which is interesting. Next up, breaker blocks. So what's a breaker block? Imagine an order block is a wall that's supposed to hold the price. A breaker block is what's left after the price smashes right through that wall. The old support becomes new resistance. The indicator marks these zones for you, highlighting where a major shift in market power has occurred. Like order blocks, not everyone will be a winner, but they pinpoint critical areas on the chart. All right, now for my favorite feature because it's all about hunting liquidity. Liquidity grabs. You'll see these red and green circles appear. A red circle means price wicked above a previous high, grabbing stop losses before potentially moving down. A green circle means price wicked below a previous low, grabbing liquidity before potentially moving up. This feature is powerful because it shows you exactly where the market is hunting for stops. Let's look at a real example. Here, the market is in a clear uptrend. We're looking for a buy. This order block down here is our point of interest. Now, a rookie trader might just place a limit order right here, but a smart money trader knows that price will often dip just below that obvious level to hunt for stops. And look what happens. Price comes down, we see a liquidity grab signal as it wicks below the low, and then we get the explosive move up. Combining these signals is where the magic happens. And here's the best part. Flux Charts has actually made this liquidity grab feature completely free. You can go to TradingView right now, search Liquidity Grabs by Flux Charts, and add it to your chart. That's a huge piece of value right there. Okay, let's quickly cover the last few core features. Market structure. The indicator automatically marks your breaks of structure, signaling a trend continuation, and your changes of character, which signal a potential trend reversal. You might need to tweak the swing length in the settings to match how you personally draw your structure, but it's a great way to keep your structural bias front and center. Finally, we have equal highs and equal lows. These are massive pools of liquidity. The indicator does a solid job of marking these areas where you can expect a potential liquidity sweep or a strong reaction. So after all that, what's the final verdict? The Price Action Toolkit by Flux Charts does an impressive job of automating smart money concepts. It's cleaner and more intuitive than most SMC indicators I've tested. It's not a magic buy-sell button. You still need to know how to trade. But as a tool to speed up your analysis, identify key zones, and keep you focused on high-probability areas, it's incredibly powerful. Now for method number 2. How do we make this strategy even more reliable? We add a trend filter. This helps us avoid taking buy trades in a downtrend or sell trades in an uptrend. We're going to add a double exponential moving average, or EMA. Go back to your indicators and search for 3 exponential moving average from Trade Titan. Click on that, and let's adjust the settings. In the Inputs tab, set the short length to 20 and the intermediate length to 50. Then, in the Style tab, uncheck the long EMA. We don't need it. Feel free to make the other 2 lines thicker and change the colors so they're easy to see. Here's the simple rule. If the 20 EMA is above the 50 EMA, the trend is up. We only look for buy trades. If the 20 EMA is below the 50 EMA, the trend is down. We only look for sell trades. This one filter will save you from so many bad trades. So, let's put it all together for a method number 2 buy trade. 1. Check the trend. The 20 EMA is above the 50 EMA. We are in an uptrend. Check. 2. Spot the bullish order block. A green zone appears. Check. 3. Wait for price to return. Price pulls back into our green zone. Check. 4. Get confirmation. We see a clear bullish engulfing candle form. Check. 5. Execute. Enter the trade with the same stop loss and take profit rules as before. By waiting for all 5 conditions to line up, you are taking A+ quality trades that are flowing with the market's momentum. And there you have it. 2 powerful, easy-to-understand methods for trading with smart money concepts. Method number 1 is fantastic for clean price action, while method number 2 adds that extra layer of confirmation by making sure you're always trading with the trend. But I want to hear from you. Drop a comment below and tell me, what's the one smart money concept you struggle to identify the most? Is it order blocks? Liquidity? Let's talk about it. Now, this is a premium indicator, but the team at Flux Charts gave us a 15% discount code if you want to try it out, and all the links are in the description below. Disclaimer: this is an affiliate code. Please do your own research before purchasing any tool. Check reviews on Trustpilot and make sure it's right for you. This is not financial advice. Thank you for joining me for this deep dive. If you got any value from this video, do me a favor and smash that like button. It tells YouTube we're doing something right. Subscribe for more no-nonsense trading content, and I'll see you in the next one.